All right, welcome. Good afternoon. I'm Jens, and I welcome you really from the NMAC offices here in Munich. Big pleasure to be back. After more than 30 episodes of the Digital Trader Summit, we took a pause. Honestly, mostly due to me being busy with other things, among others, really doing a financing round for NMAX. So we are prepared for the next years to come and can invest more and more in new commodities, in more features on the platform. And one topic which is really important to us is moving into the carbon trading space as well. So there's something you can expect from us around the end of the year. And we're preparing that already, getting us more informed about the carbon market, especially the EU ETS market in Europe. And that's why we have invited Victoria today. She's joining us from Argus. She's a co-editor, no, not exactly in the emission space. Maybe you can have some words as well to yourself. She will have a quick presentation to enter the discussion with all of us. So feel free to participate. You see the Q&A function on the left top of your screen, and that allows you to put in questions. And I will take them out and feed them into the discussion with Victoria. So it's a more structured discussion, but I really bet on your participation and your interest. So we get the most out of our discussion with Victoria. Now, enough of our introduction. Victoria, floor is yours. Thanks for joining us.
Thanks very much, Jens. It's lovely to be here and talking to all of you today about the EU ETS. As Jens mentioned, I'm Deputy Editor of the European Emissions Report for Argus. And today I'm going to start with just a brief presentation to take everyone through some of the changes that we are going to be seeing in the carbon market over the coming, just showing my slides here. I think that should be the correct slides, hopefully, over the coming months and years. So essentially, the policy backdrop for the EU ETS at the moment is very complex. We have a lot of potential changes to the market on the table, which could all have quite significant implications for how the market functions and where we see prices going in the coming years. So, and the agreements on these changes are ongoing. So that's very significant for movements in carbon prices. So this all began when the EU decided to increase its climate targets for 2030 to 55% below 1990, a 55% cut compared with 1990 levels by 2030. This was up from a 40% cut previously, so quite a significant increase in ambition. And it therefore needed to look at ways to align its climate policy with this new target. And that's when the European Commission came out last July 2021 with its Fit for 55 package. And because the EU ETS is viewed by the EU really as its flagship climate policy, there were a lot of changes to the market proposed as part of this package. This included a lot of elements which essentially lead to tightened supply and increased demand at the same time. So a much tighter supply-demand picture than we would see at the moment. This includes decreasing the overall supply cap for the market. It's a cap and trade system. So essentially, the EU decides in a given year how many emissions are permissible, and then it converts that into tradable carbon allowances. And this supply cap reduces each year to reduce overall emissions, but that would be, under the Commission's proposals, a much steeper downward trajectory than was previously expected. Similarly, the Market Stability Reserve, which was put in place in 2019 to absorb excess supply from the market would continue absorbing at the same rate it currently does. It was initially planned that that would reduce to a 12% intake rate, but that will stay at 24% under the Commission's proposals. And the scope of the scheme would also be extended. So they're looking to include maritime emissions in the EU ETS from next year under the initial proposals, and also to set up a new ETS for road transport and buildings, which would begin in 2026. There is, of course, also the famous carbon border adjustment mechanism, which also came in through this Fit for 55 package, which is essentially a way of tackling the competitivity issues faced by industry who have to pay these EU carbon prices and perhaps wouldn't have to do so in other jurisdictions. And because this functions basically in the same way as the current free allocations for industry, these would be phased out alongside the introduction of the CBAM. And under the Commission's proposals, that would take place by 2035, essentially. However, of course, this is the EU. It's not just up to the Commission what happens to the market. And so these proposals were then sent both to the European Parliament and the Council for them to put forward their own views on the file. And I won't go through this entire slide. We'd be here until next week if I did that. But I think even just seeing the size of this slide and how much information is on it gives you a bit of an idea of how complicated this file is and how many potential changes there are that we could be seeing in the market. So I've just highlighted in red there what's different in the Parliament and Council positions on this matter compared to what the Commission initially put forward. And as you can see, it's not even just that there are differences on opinion in terms of how quickly these measures should be implemented or to what extent they should be implemented, but there are also additional elements that have been brought in by the Parliament and Council. So, for example, they both look to strengthen Article 29A of the EU ETS directive, which essentially allows for intervention in the market if prices are deemed to have risen too high and not be driven by fundamentals. This already exists, but the Commission hadn't proposed changing it at all, whereas the Parliament was looking to essentially make this easier to trigger. And along the same lines, really, in terms of trying to tackle high prices and volatility, which we've been seeing increasingly in the market in recent years, the Parliament also looks to restrict participation in the market to certain entities. In their proposals, they wanted to restrict participation simply to either compliance entities or financial intermediaries acting specifically on behalf of those entities. This was not mentioned by the Council in their proposals, and it has been strongly advised against by the Commission. So that's certainly going to be a big sticking point in the coming negotiations. And the stage that we're at now is something called the trilogues, which is where the Commission, Parliament and Council all come together and they have to negotiate between them, looking at these different proposals that they put forward to come to an agreement on a final legal text. And there are lots of elements that are still up for discussion here. So we really don't know yet what exactly is going to come out of those negotiations. And as if that wasn't complicated enough, of course, we then had Russia's invasion of Ukraine in February, which, as well as having, of course, wide-ranging macroeconomic and geopolitical implications, also sparked specifically some very acute concerns surrounding energy security in the EU. And this prompted the European Commission to bring out its REPowerEU initiative. This is designed to move the EU away really from its reliance on Russian fossil fuels. And this, of course, has implications for the wider energy complex, but it also specifically relates to the EU ETS, because the Commission was looking to raise around 20 billion euros of the funds needed for this initiative through the carbon market. The initial proposals put forward by the Commission were to sell allowances currently held in the Market Stability Reserve. This sparked a number of concerns from various people from various sides, including the European Court of Auditors, that this could weigh on the value of carbon allowances and also potentially have implications for the integrity of the market, given the kind of unexpected ad hoc political intervention. And that has really since been ruled out as an option by the Parliament and the Council. But what we are still seeing is a disagreement between the Parliament and Council on the alternative approach to this. So on the one hand, the Parliament's Environment Committee put forward a proposal instead to front load allowance auctions, which basically just means bringing the auctioning of allowances that would otherwise have been sold, say, post 2026, forward to selling them between 2023 and 25 to just raise those revenues quicker than they otherwise would have been. Whereas the Council focused more, in its opinion, on raising around 75% of the revenues through the Innovation Fund, and then just another 25% from front loading. So again, we've got these debates going on which have potentially quite large implications for the carbon market, and they are still all under discussion and will be probably for the next few months, because they're very complicated issues. And what that has done is, oh, sorry, my chart doesn't seem to be displaying very well there, but basically it's led to high levels of uncertainty for the carbon market. And I think we're seeing that uncertainty reflected in some of the volatility that we've seen in the carbon market so far this year. And what this chart is supposed to show you, and doesn't show you very well, unfortunately, is that prices have been fluctuating quite significantly throughout the year so far. We saw the benchmark front year EU ETS contract drop in value quite significantly in February following Russia's invasion of Ukraine. It then rebounded relatively quickly, and indeed by August it had actually risen back to record highs of almost 100 euros per tonne. We haven't quite got to that magical figure yet, but we got close to it. And then quickly prices came right back down again, and they're currently trading, I guess, in the kind of mid to upper 60s, somewhere around where we were seeing the product trading at this time last year. So I think this is very reflective of the situation that we're in, particularly given that these potential changes for the market, in a lot of cases, they're kind of diverging. On the one hand, you have the Fit for 55 package looking to tighten supply in the market to try and reduce emissions to meet emissions cut targets. And on the other hand, you have these proposals to increase supply in the market to raise revenues to ensure energy security. And I think ultimately the two aims do really converge, and that is kind of the thrust of the REPowerEU initiative, is saying if we increase renewable capacity, if we decarbonize our economy, then we are less reliant on importing fossil fuels from any other region of the world. and we're also cutting emissions at the same time. So that kind of solves both issues. But of course, that change requires investment, it requires infrastructure, and that can't happen overnight. And so in the meantime, we have this winter, and which we're trying to get through with enough energy and with consumers being able to pay their bills. And so I think we're just seeing probably more in the short term, a kind of divergence between those two aims. And the carbon market just really finds itself directly in the middle of this, of these two diverging directions. So that's why we're seeing so much, or one of the reasons why we're seeing so much volatility in the carbon market at the moment. But I think I'll leave my introduction there for now, and I'm sure we'll pick up on some of these things in more detail in our discussion.
Great, thanks, Victoria. Very good introduction. Gives us a good overview of what's going on the let's say political regulatory scene right now. So please, everyone invited to join in with specific questions. Let me pick up one expression you used right now. You called the ETS the flagship of European climate policy, and now we have this REPower package. We have the 55 goals. There's more than just ETS right now. Is it still the flagship? Does it have still the full support of Commission and member states? Is that your impression?
Yeah, it's interesting. I'll start by saying flagship, but that's very much not my wording. That is kind of how the EU has presented the market. But I do think, particularly from the Commission side, we've seen them doubling down very much on how important the carbon market is. And they're really, apart from I suppose, in a way, the REPowerEU, their initial proposal kind of went slightly against this, but in general, they're very much against intervention in the carbon market, which I think they view as detrimental to the market. And they've been very firm on that, particularly we've had quite a few calls from various sides, particularly the Parliament, either to reduce speculative activity in the market, or even from some member states like Poland to suspend the market altogether. And the Commission always comes back very strongly in support of the carbon market and saying that it's essentially functioning correctly, that it's responding to fundamentals, and that this kind of intervention would not be helpful.
If there would be an intervention, and I mean, this is not just discussed for EUAs, but as well for on the gas side and power side, how resilient is the market? I mean, you could say we are in a economic war right now, so different kind of measures may apply in this kind of situation. Do you think there is some resilience from the participant side to accept that, or is there a clear red line which shouldn't be stepped over by the Commission or others?
Yeah, I mean, well, it's the difficult one. I think the carbon market, it has a good, strong basis, which is one thing that will probably encourage participants not to lose faith too much in the market. We have, these longer term proposals, the Fit for 55 package, that gives quite a strong indication of the general longer term direction of the market. So that's one thing. And then you also have the Market Stability Reserve, which I think you shouldn't underestimate how effective that's been really in kind of shoring up the market to a certain extent. So as you see on the chart where you see prices tumbled in February after Russia's invasion of Ukraine, they did rebound relatively quickly, and one of the reasons for that will be the Market Stability Reserve. We saw that also when the COVID crisis began. Prices fell, but they didn't fall nearly as far as they were trading for years, 10 years ago or something. And it's because or at least partly because there's this assurance that if an oversupply of allowances builds up in the market, it will be absorbed at the rate that it has been for the last few years. So that's kind of keeping that supply demand balance in check a bit more than perhaps if that reserve weren't in place and it was just kind of free for all and there could be an unlimited number of allowances in the market.
Yes. So if I understand you right, it's really about making sense between the long-term objectives of the EU and the short-term pressure on managing the crisis right now. Maybe focusing a little bit on the short-term side of things. There's lots of discussion around demand destruction happening right now in the industry. How much is that a driver really? And maybe as well, can you have some words on the connection between EUA prices and power prices right now? So what effect has it right now and what do you expect there to happen?
Yeah, so yeah, on the side of industry, of course, with the really high prices that we've been seeing recently, a lot of industrials have, of course, been struggling to cover those costs, and that has led to something of a decrease in industrial activity. And I think also on top of that, we're having from the policy side calls for reduction in demand, just so that we don't, run down stocks of gas and stuff too much for the winter. So it's kind of a double effect on that side, and we certainly will see a reduction in demand for carbon allowances as a result of that. I do think, though, there is some kind of push in the other direction to a certain extent, in the sense that we're also seeing lots of policies coming out to try and compensate industries who are struggling with costs and to give them financial support. And that could see some recovery, or at least reduce some of the demand destruction that we might otherwise have expected on the industry side for carbon allowances, depending on how much they're forced to reduce their production over the coming months. But I think, overall, even with the macroeconomic situation that we're in, we would expect something of a slowdown in industrial activity, because we're having an overall economic downturn in the region. So that's a kind of logical consequence of the situation in which we find ourselves. In terms of the effect on power prices, yes, obviously when carbon prices go up, that has an effect on power prices, because the carbon price is kind of baked in to the power price in terms of, gas and coal-fired generators will have to pay the carbon costs, buy carbon allowances, and so that's part of that marginal operational cost. But I mean, for example, on the Commission side, they've been pretty firm on emphasizing that this is a relatively small portion of the overall rise in power prices, which is in fact mainly driven by the rise in gas prices. So I think technically it's not the main driver of the increase in power prices that we've been seeing recently. I do think perhaps one of the reasons why we have been seeing calls from a fair few people for carbon prices to be managed to manage the power price, even though that's not the main driver of those prices, is perhaps because the carbon market is very much a political tool. It was set up for a purpose. It didn't just kind of organically grow out of nowhere, and as such, it's much more easy, I guess, in inverted commas, to intervene in that market and to make political decisions about that market than it is for, say, the gas market, which is a global physical commodity. So that's perhaps why we're seeing something of a difference between, a mismatch between the proportion of the power price rise caused by carbon and the calls perhaps for those carbon prices to be reduced to respond to that. But as I mentioned earlier, the Commission is really not very keen on intervention in the carbon market. So even with all these calls, we're not necessarily going to expect to see a lot of intervention in the carbon market.
But if you look on the volatility we have seen right now at the short end, maybe looking a little bit to the year end as well, where prices end up, what are the major drivers for you in this short term on the prices?
Yeah, well, I would say that, and one of the reasons that I focused in my presentation on policy was that really the huge amount of the movements we've been seeing recently in the market have been reacting to all these different mixed messages that we've had coming out of the EU about what may or may not be happening with the carbon market. We saw the prices come down quite dramatically when the Commission first put forward its proposals for selling MSR allowances, for example. These are very significant potential changes to the market, and the carbon price will continue to react probably to any developments in that, and there probably will be quite a few developments over the coming months because, as I mentioned, these discussions are very complicated and there are lots of different elements to them. So it's not as if we'll just one day they'll just come out with a finalized, nice, easy decision. It's going to be this quite long, drawn-out process, and I think participants are likely to react whenever they get information on that. And similarly, I mean, if you look at the chart, the not very good chart below, you can see the price has stabilized a fair. I mean, it's fluctuating a lot day on day at the moment, but within quite a tight range. And again, I think that's kind of a reflection of a couple of things. On the one hand, the uncertainty, but also that we're waiting to hear what these decisions will be. And so that
let me ask you quickly, what do you see there as what do you see as a timeline here? When do you get to kind of a final legal text? When this period of insecurity over?
Yeah, I guess that's what everyone wants to know. I think
your experience with how long these processes take. I mean,
yeah. So for the Fit for 55, I think we can expect that to take quite a long time. I would not expect that to be done by the end of this year. I think it's a huge file, and it has to go through these trilogue negotiations, and of course, now that we have this added complexity of the kind of energy security concerns in the meantime, I don't think it's been delayed significantly by that, because trilogues are continuing, and I think that may come as a surprise to some people, because I think some people would have expected maybe the EU would have said, oh well, let's push that back, put that to one side because we have other problems. But as I mentioned, these things, they do kind of converge in the end. They're kind of coming to the same conclusion. So I suppose that's perhaps why they've continued on with that file. But they've certainly fast-tracked the REPowerEU side of things. So we haven't had such a drawn-out process as you would normally expect for the EU on this kind of decision-making. And I think the Commission are hoping for a decision by the end of this year for REPowerEU. Right.
You see, there was a question as well here in the Q&As I would love to pick up here around the REPowerEU. Will it have kind of an effect on the new price formation on the merit order? Or is that a theme for you?
In terms of from the EU ETS side, or more generally, I have to say I haven't looked at the initiative much more widely. I've really focused more on the carbon market side of it.
Okay, and maybe one other topic I want to pick up here, you mentioned that already as one of the policies. It's about participation in the market, about industry and about utilities and financial players as well. What has changed there as well in recent months? Because I think we had a good understanding how they all contributed their different roles to the markets. Do you see there a certain pattern of change recently, or any kind of as well data points which make I think it was the EU Parliament to really question the role of financial players?
Yeah, well, I mean, we have been seeing in commitment of trader data over I guess I would say since maybe the beginning of last year, there's been an increasing role of investor participants in the market. That has certainly been growing, and we've also been seeing an increase in products on the market, such as ETFs that we weren't really seeing before, that are directly linked to the EU's carbon market. So that's certainly something that is a growing segment of the market. But if you look at, say, the report brought out by the EU's financial regulator, ESMA, earlier this year, which the Commission asked them to produce, basically to ensure that the market was functioning correctly. They found in the data that they were looking at that there was only still a very limited proportion of the overall participants in the market that were actually kind of purely investor or financial participants, so to speak, without any links to compliance buyers. It has to be said that, of course, compliance entities do not necessarily buy their own allowances directly. Financial intermediaries can do that on behalf of compliance entities, and so sometimes these lines can be blurred, and that is also one of the potential problems if the EU did decide that it wanted to limit participation in the market, is how do you draw that line between the different kinds of participants? Of course, there are other implications as well on areas such as liquidity in the market, for example.
So the ESMA report you're saying would look the same today as it looked at the beginning of the year. There have not been fundamental changes or so which make the Commission revise their view, or?
Yeah, essentially. I mean, I think it has probably increased, but not. It's still such a small proportion that they don't view it as a kind of significant driver for the changes we're seeing in the market. So they essentially concluded that the market is functioning correctly and responding to fundamentals, which is the argument that the Commission had initially put forward.
Very good. Maybe I know that you can speculate about prices. You're not allowed to, in a way, in your role today. But coming from a different area, and I want to pick up another question here we got, is that does the EU have a target in mind where prices are supposed to be to achieve this net zero ambition? Have this been discussed? What is a good price of carbon, if you wish?
Yeah, I mean, the Commission put together an impact assessment back in, I guess perhaps it was around, I can't even remember when it was. It was a while ago when they were putting forward their Fit for 55 proposals, and they did put in some kind of estimations of where the carbon price should be to reach particular goals. I think they perhaps would change those now, because as far as I remember, some of them were probably below the levels that we're seeing carbon trading at now. But at the time that they put them forward, carbon prices were significantly lower. Of course, they've rallied a lot in the last year or two. So I think, but I do think there's just a general feeling that carbon prices are not really high enough to incentivize decarbonisation, particularly in hard to abate sectors still. And it's more when you get into the realms of 100 euros per tonne and above that you start seeing competitive prices for things like CCS, or probably even higher for something like green hydrogen. And of course, this could be problematic because we need to invest in the infrastructure for these technologies probably now, before the price is really getting to the levels where that would incentivize that change. So that could be a problem.
Yeah. Love to invite everyone to join in and bring more questions, so we still have some time to pick them up. Meanwhile, maybe one other measure was the carbon border adjustment, which is planned. I was surprised for 35. That's very long down the road, if you wish, since we have a lot of debate right now about the competitiveness, the global competitiveness of European industry around power prices and overall, the attractiveness of the EU. Why is it coming so late? I mean, are we not able to switch to such a mechanism already 5 years earlier?
Yeah, I think the idea is that the mechanism itself would begin being phased in, certainly this decade, but I think where there's been a debate on how quickly it should be phased in, but there's also been a debate on how quickly free allocation should be phased out. So I think possibly that was, slightly confusing on my slide, but this was specifically referring to the phase out of free allocations. So in fact, I think some people think that's kind of late for the final phase out of allocations if the CBAM comes in a few years before then. Of course, this is a debate to be had, but if you're on the kind of greener side of the argument, you would probably say free allocations should be removed immediately. And then if you're on the side of kind of trying to give industry as much time as possible, I guess, to decarbonize, you might say that that those allocations should be kept for as long as possible. So I suppose probably in the trilogues they will try and come to some kind of agreement somewhere in the middle on that. And I suppose that's really what the Parliament put forward with its 2032 proposal, which is slightly earlier than what the Commission had originally suggested.
Understood. We facing some technical problems. You're not visible right now. I don't know. Maybe you can switch on and off your camera. I have the problem here. Want to see you till the end if you're responding.
Yes.
Maybe on one more aspect here, the maritime emissions, which will be included, or definitely sure. Can you give us a feeling for how much bigger the market gets by that? Is that an X% extension of the current market? You have a feeling for that?
I'm still trying to start my video. Is that working now? I don't know. I don't have a percentage off the top of my head, I'm afraid. But it was obviously increase participation in the market, and this is another one of those things that's it's a bit of a debate as to how quickly that's going to happen. Of course, the Commission's idea of starting that from 2023 is probably quite tricky, given that we're nearly there already, and we certainly don't have any final legal text ready. So perhaps that won't be happening. The Parliament wanted to phase it in a little bit more gradually, starting in 2024, and then I think bringing in slightly smaller ships probably from 2027. And I think the Council had a similar view on that. So yeah, it will grow, but the size and the pace of that is still up for debate.
Excellent. Maybe closing with the standard question these times, if whatever we're discussing, power, gas, or ETS, when are we back to some normality, and how does the normal look like from your perspective?
Yeah, I mean, this is I think one of the huge challenges for the market is just not knowing and having this huge uncertainty hanging over it. certainly we need to get through these these big policy decisions on REPowerEU, hopefully, as I said, by the end of this year, and then I guess the Fit for 55 will follow maybe sometime early next year. I wish I knew, but I don't. But then with the situation we're in geopolitically, I think the problem is that, of course, other energy markets are always feeding into the carbon market and will be reacting to what's going on in the wider energy complex. And so if we continue, even if we have all the decisions we could possibly want on the structure of the EU ETS itself, if we still have uncertainty in terms of conflict, and that's driving big changes in how we approach the gas or the power market or anything else, then that will continue to drive this uncertainty and volatility in the carbon market as well. So I don't think we'll probably have a very stable, easy life for the carbon market anytime soon.
But that makes it interesting, I think. I think it's a fascinating market at the intersection of policy, definitely, and the markets, which we believe in. I want to say that. I hope that we really have efficient markets during the whole crisis, even if some interventions in gas and power or ETS will happen. So I would not rule them out, but I think there's a way of dealing with this and coming back to some normality. Thank you very much, Victoria, for your insights, your knowledge you have been sharing with us. Really interesting space. Thank you very much. I want to thank you as well, all the participants. Hope to see you all soon back. So we'll come back with more episodes of the Digital Trader Summit. Really looking forward to it. And stay tuned. Follow us on LinkedIn or on our email distribution, and we keep you informed about what's next. Thanks a lot. Have a good afternoon. Bye-bye.
Thanks very much.